Yes, earnings will continue to come down, but we as investors don't know how much they will come down. We have seen all throughout 2022 earnings estimates come down. What we do know is that when it comes to the income and growth strategy, by utilizing convertible bonds and high yield bonds, we can augment the risk return profile. So even if earnings do come down, it is possible with high yield bonds and convertible bonds that is a positive attribute for the income and growth strategy in 2023. This has changed over the past couple weeks with all the banks making headlines. What we see now is that the Federal Reserve actually is anticipated, according to the markets, to cut rates 3 times in 2023. So while when we entered 2022, interest rates was a key focus for investors, it has quickly shifted to the banking sector and also its impact on corporate profits in an economic recession. There are a lot of uncertainties in the marketplace right now, but when we think of the income and growth strategy, and the reason why we're positive is not because we know what the markets are going to do. We don't. The reason we're positive is because of the history of the asset classes. When you look at high yield bonds, you have an asset class that yields 9% right now. There will be an uptick in default, but almost every single company will pay back its debt. That means that you're going to get your income plus price appreciation. When you think of the convertible bond asset class, that also holds true. A lot of convertible bonds today trade below par or more like yield instruments. That means that if the company does not go bankrupt, you're going to get your money back or par in most scenarios. So if you put this together, the reason why we're positive on income and growth, despite all of this uncertainty, is because our asset classes with high yield bonds, convertible bonds, equities with covered call, can help provide a little bit of clarity in this uncertain environment. What's unique about the income and growth team from a multi-asset strategy is, unlike other multi-asset teams that try and time asset classes, the income and growth team does bottoms-up fundamental research and credit research to identify the best companies. Once we determine the companies that we want to invest in, then we determine which asset class provides the investor income, plus upside participation, but more importantly, downside protection. So fundamental research, credit research is extremely important, but at the same time, our asset classes provide investors that upside participation, income, and downside protection.